CoreWeave revealed a $104 billion backlog, and the stock jumped nearly 16% after earnings. But there's one number investors need to pay attention to: $9.4 billion. That's what CoreWeave spent on capital expenditures in just one quarter. So is $CRWV becoming one of the biggest winners of the AI boom? Or is the market pricing in too much growth? Let's break down the numbers. 1. The earnings beat. First, the good news. CoreWeave reported $2.58 billion in Q2 revenue, up an incredible 112% year over year. That slightly beat expectations of around $2.50 billion. Adjusted EPS came in at approximately negative 1.3, better than the expected negative 1.2 cents. So on the surface, this was a strong quarter, but the real story isn't just the earnings beat. It's what happened to CoreWeave's future revenue visibility. 2. The $104 billion backlog. CoreWeave's backlog has now reached approximately 146% year over year. Think about that. CoreWeave generated around $2.6 billion in quarterly revenue, but has roughly $104 billion of contracted future revenue. And the company added more than $25 billion in new customer commitments early in Q3. This tells us something important. The demand for AI compute isn't just hype. Companies are signing enormous commitments for the infrastructure needed to train and run AI models. And that gives CoreWeave significant revenue visibility. 3. Why the bulls are excited. Now let's look at the bullish case. CoreWeave raised its 2026 revenue guidance to approximately $12.4 billion to $13.2 billion. That's above its previous $12 to $13 billion range. The company is also rapidly expanding its infrastructure. CoreWeave reported around 1.5 gigawatts of active power, with nearly 500 megawatts added during the quarter. So the growth equation is straightforward. AI demand creates demand for compute. CoreWeave builds the infrastructure. Customers commit to that capacity, and CoreWeave converts those commitments into revenue. If AI spending continues accelerating, this could become a very powerful growth engine. 4. But here's the $9.4 billion problem. Now let's look at the other side, because there is a number here that investors cannot ignore. $9.4 billion. That's approximately how much CoreWeave spent on capital expenditures in Q2. That is an enormous amount of money. CoreWeave has to spend heavily on GPUs, data centers, power, and infrastructure before it can fully monetize that capacity. And financing isn't free. The company reported approximately $640 million of net interest expense in Q2. So here's the key point. A $104 billion backlog does not equal $104 billion of profit. CoreWeave still has to convert that contracted revenue into cash flow, and investors need to watch margins, capital expenditure, interest expense, and free cash flow. 5. The stock reaction. And Wall Street clearly liked the earnings report. Based on the earnings data we're analyzing, $CRWV closed around $90.32 before jumping to approximately $104.52 after hours. That's a 15.72% surge. Why? Investors saw three things: 110% revenue growth, a $104 billion backlog, and higher 26 guidance. That combination tells the market that demand for AI infrastructure remains extremely strong. But there's a catch. At these valuations, investors will eventually demand more than revenue growth. They will want to see profitable growth. 6. My bull versus bear case. So here's my framework for $CRWV. Bull case. AI infrastructure spending continues accelerating. The $104 billion backlog converts into revenue. Capacity expands successfully. And margins and free cash flow improve as CoreWeave scales. That could make CRWV one of the major infrastructure beneficiaries of the AI boom. Bear case. Capital spending stays enormous. Financing costs remain high. Competition increases. Or AI customers slow their infrastructure spending. In that scenario, the market could quickly become less forgiving. Final verdict. So, is CoreWeave a buy? I think investors should focus less on the headline $104 billion backlog and more on how efficiently CoreWeave converts that backlog into profitable cash flow. For me, the 5 numbers to watch are revenue growth, backlog conversion, gross margins, capital expenditure, free cash flow. The AI demand story is clearly powerful, but the next phase of the CoreWeave story is about execution and profitability. What do you think? AI infrastructure winner or too much growth already priced in? Drop your view in the comments. And if you want more data-driven stock analysis, subscribe to Stock Market Analyst. Thanks for watching Stock Market Analyst. Stay informed, invest wisely, keep growing.